sort of crazy situation. The small cap index now up 54% over the past year. It's outperforming the S&P. Over that same time, GameStop shares soaring about...
Hey there guys, what's going on, and welcome back to our channel. Futures on the stock market are higher the day after the S&P 500 reached a new high, and Target just posted its best quarterly sales increase ever. For a variety of reasons, investors are looking past the epidemic. Stocks have been plummeting, leaping, dropping, jumping, and jumping again recently, making the market look unusually unstable. The first quarter earnings season, which is almost done, explains a lot of what's going on. Here's why stocks are about to go insane.
To thank you for watching this video, we're offering you an absolutely free training webinar. How would you feel knowing that you could pay every bill you have right now as well as any future bills that come in? Commission Hero is a proven system that has helped over 8,000 people earn upwards of $1,000 a day or more. The best part is that there is zero experience needed to get started. In this free training, Robbie Blanchard and his team will teach you the top 3 secrets to how and why this system works, and how it can also work for you. Join the thousands of people who have found success and financial freedom using Commission Hero. Right now, the first 100 people to use the link below will get access to this free webinar. Now let's get back to the video.
Number 4, the market is going crazy. After trade yesterday, the S&P 500 was 0.005% higher than it was 6 months ago, marking a new high. That might not seem significant until you consider what transpired in the interim. In the early stages of the epidemic, the blue chip index lost a third of its value, but then surged back, rising more than 60% from its low in late March. When compared to the pandemic's human and economic destruction, a new market record may seem odd, or, in the words of one expert, this market is insane. There are 5 key arguments that investors are making to justify the surge, as Andy discusses in a guest appearance in The Morning, our sister publication. Looking past today's terrible news and anticipating brighter times in 18 to 24 months, the ongoing success of a few large IT firms, news of a vaccination breakthrough would send the stock market soaring. The Fed is creating money and keeping interest rates low because it's accommodative. The expectation is that Congress will overcome its differences and inject additional stimulus into the economy. The market is highly top-heavy, with only 5 businesses accounting for more than a quarter of the S&P 500's market value: Alphabet, Amazon, Apple, Facebook, and Microsoft. So far this year, those IT behemoths have gained roughly 0%, while the index's other 494 firms have lost a few percentage points. Another potentially worrisome indication is the increased selling of business stock by insiders. AlphaSense, a data platform, combed through DealBook's annual reports and discovered that closures of CEO stock transactions have already surpassed last month's total and are on course to break the record established in February when the market reached its previous high.
Since then, you've had a spectacular win. They barely skipped a beat when the pandemic hit. How could the market be so wrong? Give me a break. The market's insanely wrong every day.
Number 3, SPACs are being insane. Another day, another rush of stories about so-called special purpose acquisition firms, the publicly listed mergers and acquisitions machinery that have become Wall Street's newest fad. How is it? According to SPAC research, these blank check businesses have raised more than $40 billion so far this year, compared to $23.6 billion in all of 2020. By combining with a SPAC, another electric vehicle manufacturer became public. Canoo, a company that offers van-like cars on a subscription basis, has announced plans to combine with Hennessy Capital Acquisition Corp. IV to become a publicly traded company. After Nikola, Lordstown Motors, and Fisker, it's the 4th electric car firm to take this path. More SPACs have been formed, with several well-known names among them. Following in the footsteps of Bill Ackman and Dan Frankel, activist hedge fund Starboard Value announced ambitions to raise $400 million. Bill Byrne, a seasoned financier with SPAC expertise, raised $1.5 billion, bringing the total offering size to $1.5 billion. Kevin Hart, the co-founder of Eventbrite, also secured $300 million for a new SPAC to invest in a software startup. Mr. Hart discussed how he came up with the idea for his SPAC and how he's coping with the competition to DealBook. Consumer internet firms, marketplaces, and financial startups are on his radar, and the fund's smaller size enables it to target younger companies with founders on whom he wants to gamble. Indeed, he's counting on his connections with Silicon Valley venture capitalists and startup creators to help him stand out in an increasingly competitive field. Mr. Hart was an early investor in Airbnb and Uber in addition to creating Eventbrite. What, in his opinion, is the driving force behind the SPAC boom? Despite travel limitations imposed by the epidemic, strong equity markets are assisting SPAC acquisitions to be completed swiftly. Mr. Hart told Jessica Hirsch, our new DealBook reporter, that we had our first org meeting with Goldman Sachs on June 19. We engaged our lawyer at that time, and 60 days later, we're now a public company in the market ready to go.
But where's all that money coming from? And where's it going? And why does a new celebrity SPAC seem to pop up every day?
To thank you for watching this video, we're offering you an absolutely free training webinar. Do you want to learn the secret of improving all aspects of your life and unlocking what you're really capable of? The legendary Bob Proctor spent over 57 years learning this one thing and is hosting a free webinar where he reveals what he's learned and what actually works. He'll teach you the law of compensation, a secret only the mega wealthy know of but not taught in our educational system, and the impression of increase, the law of laws that will increase areas in all aspects of your life, whether it be in health, relationships, or wealth. Right now, the first 200 people to use the link below will get access to this free webinar. Now, let's get back to the video.
Number 2, meme stocks making a comeback. When GameStop, BlackBerry, and even Blockbuster's dehydrated carcass resurrected in January, the clock was already ticking for when they would collapse again. Is it going to take hours, days, or even weeks? It's been 6 months and the key meme stocks are still trading at their highs. However, although meme stocks may have exposed a new younger audience to the joys of investment, the viral trading frenzy, according to famous financial TikTok artists, is fostering false expectations. According to recent research from financial services firm Fidelity, more than half of Gen Z age persons questioned made a transaction in the first 3 months of 2021, a period when short seller attacks had begun to cause heightened market volatility.
You know, I think obviously it can impact the market over these shorter periods of time where you are seeing a number of these stocks see monstrous moves.
Number 1, confusion and disorientation. Veteran investor Mark Mobius has warned that market volatility and central bank movements should be studied extremely carefully, characterizing crazy swings in assets like Bitcoin as being driven by disorientation and uncertainty. Given the fletching recovery from the coronavirus epidemic and the threat of increasing inflation, market speculation over when central banks may begin to reduce asset purchases has been widespread for months. Mobius Capital Partners founder Mark Mobius told CNBC that central bank actions must be constantly monitored. Even without central bank worries, there have been instances of extraordinary bank volatility. There have been instances of extraordinary market volatility since the beginning of the year, ranging from the retail trading frenzy that struck US stock markets in the spring, fueled primarily by Reddit. With that being said, if you agree with our analysis, then do let us know by hitting that like button down below, and if you want more content like this going forward, then make sure you're subscribed to our channel and hit that bell icon. And as always, I'll catch you guys later in another video. Bye now!